All right. Well, thanks everyone for joining our business success webinar. Today, we're going to be talking about business formation, and we have a wonderful guest here. Her name is Tadha, and I'm not going to mess up her last name, but she's done this webinar for us for the Betsy in the past. So she's going to do it for us today to talk about business formations and the different business structures you can do as a business. So let me turn it over to Tadha, and Tadha, I'm going to share your screens as you're talking. So just let me know.
Okay, great. If you want to just skip into like the second slide, I'll just kind of introduce myself. Hi, everyone. My name is Tadha Ahtone, and I am an attorney and also a business owner. So a lot of the things that I talk about today are because of the fact that I have actually run and do still run two businesses, that I also bring my legal experience and my legal education to the matter. And so I have to fully state that I am not giving you any legal advice, although I am an attorney. I am merely here to provide legal education to you and to help you understand some of these entities and what it means to have an actually legally filed business in place. So I thank you all for attending today. If you want to jump into the next slide, please. So Cerila asked me to really kind of focus a lot on more of the LLCs, but there are a few different entities that are out there that you could choose in order to be the vehicle for your business. There are things such as sole proprietors, corporations, general partnerships, limited liability companies, limited partnerships, and nonprofits. So today, because I understand that a lot of you are looking more at the LLC model, I'm really going to briefly touch on sole proprietors and corporations, and then I'm going to try to focus mostly on limited liability companies. And feel free to stop me if you have any questions or if I'm going too quickly over the material, just let me know. But also, as I mentioned, I'm happy to answer more questions next week when we each get into this in the individual state level. Next slide, please, Cerila. Thank you so much, by the way, Cerila and Karen, for having me today, and Cerila for controlling the PowerPoint. So sole proprietors, this is a really easy thing for anyone to get into. If you are just out there operating a business and you haven't filed anything sort of legally, you're operating as a sole proprietor. And really, this is not the best thing for you as a person, as an individual, but also not the best thing for you in order to grow your business. And the reason is because it exposes you to personal liability. So if, for instance, you're out and driving your car, doing your work business, and you hit someone, somebody could sue you and come after your assets or other things. If something goes wrong in a contract, they can personally attack your assets. So they can come after your home, they can come after your cars. They can come after any sort of equity you have. And so it's really not a great spot to be. Plus, if you're looking to try to raise capital or to get a financing loan, typically banks are going to want to see that you've actually taken the time to form a legal entity. So if you're doing this, I would highly recommend you stay tuned and choose one of the next entities that we're going to talk about in these slides. So corporations, you've probably heard a lot of, everyone has heard of corporations. That's really a legal formation that happens at the state level. And what it is a way to join multiple people together or one person. You could have a sole owner corporation, and we'll talk about that under S Corps. But essentially a corporation would allow you to sell stock and raise stock. And so you'll hear terms like shareholders or stock within corporations. That's the ownership units within a corporation. There are certain terms that are designated to be corporations. And in certain instances and in certain cases, you will have to form a professional corporation if your licensing agency requires that and you're looking to essentially operate within a state that says, hey, you've got to have a professional corporation or LLC in place. Unless you're licensed by an entity that requires it, you don't need to be concerned about it. And just to touch on the bottom, the subchapter S or C corporations, S Corps are actually different than C Corps. C Corps are what are formed at the state level, and S Corp is an is an identity given to you from the IRS. So again, corporations are really good if you're trying to raise large amounts of money or trying to scale your business, because it allows for you to transfer ownership of the company in and out rather easily, as opposed to other things like LLCs or partnerships. Next slide, please. So in order to have a corporation, you're going to want to file things called articles of organization. You're also going to want to have documents in place such as bylaws, and those are essentially the rules that sort of govern how you will operate the corporation, who gets on the board, who operates as officers. And there's a very big difference between what is a board member and what is an officer. A board member are essentially the people who oversee the mission of the corporation, while an officer is the person who oversees the day-to-day activities of a corporation. So those are people like the CEOs, the CFOs, the COOs. And sometimes you'll see people operating within same positions. There'll be board members who operate as officers in smaller corporations. But then if you look at someone large like Netflix or Disney, they'll have a whole board of directors that oversee the CEO on behalf of all the shareholders to ensure that they're accomplishing the mission of the organization. Next slide, please. So there we were going over, what the activities of boards of directors are, such as overseeing the corporation, ensuring that the proper paperwork is filed annually, and really ensuring that the CEO is doing their job to make the shareholders money. In the end, a corporation under the current laws are really required to focus the bottom line on making money for the shareholders. And they're great if you're trying to really scale and grow a company, but if you're just trying to start a little local business, then you probably don't need to get into corporations. It does require a lot more paperwork and a lot more filing that has to be done every year in order to maintain that corporation status. And if you don't have that paperwork in place, then essentially what can happen is something called piercing the corporate veil, where someone can come in and say that you're operating just as an alter ego and then personally attack your assets if you don't maintain all of the administrative paperwork in place. Next slide, please. So a lot of what I'm going to focus on here is in this limited liability company. So limited liability companies really came out of what I was just talking about around corporations. In order to keep them in place, there's a lot of paperwork, there's oversight that has to be done, administration, but then also corporations require double taxation. So at the corporate level, you're going to see taxation on the income. And then as a shareholder, you get taxed again when that income gets to, what shared out in what is called dividends to you. So a lot of people and business owners didn't like this. They didn't like the requirements. And so in the late 80s and early 90s, they started these entities called limited liability companies. Limited liability companies, as the name implies, actually limits your liability as an individual. So if you become an owner, then they can only, or if you start a limited liability company, it should maintain that liability to only the assets of the company itself, and you can't personally be attacked for your assets. But the other wonderful thing about a limited liability company is it allows through pass-through taxation. So your earnings are only getting taxed once at the entity level, well, really at the personal level. So once you get your income out and distributed, then you yourself get taxed at your personal level for those earnings. And so lawyers and business people alike have really focused more on the limited liability companies when it comes to smaller businesses, again, just because of that lack of administration that goes into the corporations, but also because of the taxation methods that come through in an LLC. So in order to form an LLC, you could have one or more members. You could be a single member LLC. And if you even are a single member LLC, you're still going to want to have things like operating agreements in place. And I'll get to that a little bit later. you'll see next week when we go through the websites at each state level, you're going to file something like articles of organization as opposed to articles of incorporation for a corporation. And operating agreements are essentially like bylaws. What they do is they set up what the ownership is, who are the members within the LLC, and what are the rules that you are playing by within the LLC. So what is the authority of the members? Is it a member managed organization? All of these types of things. And it allows you also to set out how ownership is acquired or transferred within the LLC amongst the members. But typically what you see here is smaller members within an LLC. So you'll maybe have 2, 3, 4, 5 members within an LLC. You wouldn't normally see, like as in a corporation where you would have hundreds of thousands of owners. LLCs are really more almost like a partnership. It's the best of two worlds between partnerships and corporations in an LLC. And so that would all be spelled out in your article and your operating agreement. And you are going to want to have an operating agreement in place regardless, again, of whether or not you're a single member LLC or whether or not you're a multi-member LLC. And that goes again to about ensuring that you are maintaining the entity itself, because once an entity is filed at the state level, it actually kind of becomes its own being, if you will, its own entity. So it's no longer you operating as a sole proprietor. That company becomes like a person and actually has rights as a person under our Constitution. It can buy and sell property. It has freedom of speech. It can contribute to capital campaigns. It can do all those things that a person can, but it operates as its own entity, separate and aside from yourself. And as long as you maintain the paperwork and things like operating agreements and don't mix your business account, bank account with your own personal funding and money, then you can actually ensure that you're protected at that entity level. So what that means is if somebody is out driving their bread truck and they accidentally get in an accident, then the person who was in the accident with them can only go after the assets of the business. They can't then personally pierce in and try to go after the assets of the owner and attack those things. And so that creates that liability shield that all of you are going to want when you're building up wealth and to have in place, because there are things that will happen as you become wealthier, such as becoming targets. And so people will literally go out. By the way, if you've ever paid off your car or if you've ever paid off your home, please don't ever tell anybody. And the reason is because people literally will try to target you because now you have assets that they can sue you for and take. So keep those things to yourself, but also make sure you create and ensure that your administrative paperwork is in place to always shield yourself and your family from anything that could pierce through that veil. So in LLCs, the owners are referred to as members. So you don't call yourself a shareholder or anything like that. You are a member of an LLC. That equates to an owner within an LLC. Excuse me. And in Arizona, as I mentioned, if you come in and you don't spell out what your ownership percentage is, then it's essentially equal to your voting percentage. And that can be separated out in your operating agreement. So you could have people who are owners within an LLC, but that actually don't have the same voting ability as other owners within the LLC. And that can be separated out within the classes of membership. So you could have priority or preferred members within an LLC, and then you can have different classes that would allow them to potentially, for instance, be silent partners. So they could contribute funding to that LLC, but they may not have the same control over the LLC as other members do. And then lastly, something you're going to come across again and again, either within corporations or within the LLC filings, is this word statutory agent. So I just want to take some time to talk about what a statutory agent is, because it sounds super big and fancy, but it's really not. All it is the person who's designated on the paperwork at the state level in order to receive notice of anything occurring. So whether or not your organization might be sued in court, or maybe it's just to say, hey, your annual report needs to get done. the statutory agent is just the person who is going to be notified from the state that something is occurring, or notified if the organization is being sued. So they're the ones who will receive that paperwork when you see in the movies that go, hey, you're being served. That's the statutory agent who's taking that paperwork for you. You in Arizona can operate as your own statutory agent. In Nevada, I'm actually under the impression that you actually have to hire a statutory agent. They require entities to hire separate companies to operate as these statutory agents. And so it will be different across each state, but that way you understand what those terms are. So before I go on, does anybody have any questions?
You know, I need to open up the line. Hold on one second. I'm gonna open up where everybody can talk. So if you have any questions, you can talk. Okay. Does anyone have any questions for Tadha so far? Just unmute yourself and you can ask your question. Okay. Okay, so Tadha, no one's having any questions right now. So you can continue, and I'm hoping that they have some questions at the end.
Just one
Yes,
question.
me too. Okay, great. Because I was like, I know you all didn't just grab all of that. That's impressive. It took me a year or two to get all of this. Awesome. What's the question?
Okay.
Wait. Anna has a raised hand. So Anna, go ahead and ask your question.
Okay. I just want the LLC, this is for every state, right? I mean, the only difference is the note that you have there that in Arizona, it's a little bit different, but other than that, it applies to every single state the same way.
Yes, actually, that is a great question. And yes, you are correct. So these entities, whether they're LLCs or corporations, nonprofits or partnerships, these entities are across states. Now, each state will have their own filing system, as you're going to see next week through a Secretary of State or through an Arizona Corporation Commission. They all have their own filing places. But when it comes to the knowledge of these entities, they pretty much stay the same across state lines. Great question. Thank you for letting me clarify that.
Perfect. Thank you so much.
Definitely.
Okay. Any other questions? Okay, someone else has a raised hand and I don't know who that is. Let's see.
Claudia, I don't know if that's me, but it's Claudia.
Hi, Claudia.
Hello, how are you? Thank you so much for the time and the education. And my question is about when we want to be an investor, is not going to be the same when we try to voting, or definitely they have to be part of the voting like an investor, not like a partners.
I think I sort of understand your question around investors, and I would love to jump to that right now. I was going to get to this a little bit later, but it's a good time to sort of understand the difference and the benefits of each. So in LLCs, because it operates more like a partnership where you have members and an operating agreement, and you don't have a separate oversight such as a board and officers positions, it can be a little bit more difficult to raise money for an LLC for outside investors, because when they come in, some outside investors don't want to actually be involved in the day-to-day activities of an LLC, and some LLCs may require that. Also, it's not as easy to transfer the membership of an LLC as it is to transfer the stock of a corporation. And so you'll see, if you're trying to raise capital and have intentions to try to scale and raise capital, if you're looking for things like equity funding, or if you're looking for things like silent partners, you're probably more likely to want to look at that corporation model than you are going to want to look at an LLC model. Now, the wonderful thing about this is that you can always move your LLC into a corporation. So maybe you're just starting off with it yourself or another partner, and you're not quite ready to go out and raise capital. You can always form an LLC, and then later on within your operating agreement state that you can take that LLC and transfer it into a corporation, which would allow you to raise capital much easier than through that LLC model. Does that make sense?
Yeah, it makes sense. Yeah, it makes sense. Thank you so much.
Oh, you're welcome. No, and that actually leads to something that I was probably going to talk about later, but again, it all comes at the flow of where we're at, which is when you're starting a company. And again, I own 2 different companies. You know, you really have to have these thoughts around, where am I trying to take my business? Am I always going to just want to operate a mom and pop shop, or am I trying to become somebody like Southwest Airlines or one of these large corporations, a large, big business? Small business in our country is defined as 500 employees or less. And so you can definitely run small businesses, 500 employees or less as an LLC. But if you have intentions to grow and scale, then you really want to consider how you get there. And really the way to do that is by being able to bring in financing. Now that's whether it's through a bank loan, which is not always the best thing for a company, or it's through some sort of equity investment, such as having an equity partner come in, or a venture capital fund who can come in and invest into the company. But these are things that you really kind of want to think about before you even start to get into this entity selection, because you kind of have to think about where you're trying to get to and then start to place those steps into motion, as opposed to putting the steps in motion and then saying, oh man, I wish I had thought about these things earlier and how I would accomplish them in order to, for instance, raise that funding. It also leads me to another point, and this is just a side tip about running a business. You really have to understand where your cash flow is coming. You cannot structure and strategize a business based off the idea of getting grants, or even really based off the idea of getting venture funding, particularly when it comes to women. And I know we're mostly women on here. I don't know if there's any men on here, but less than 2% of equity funding, venture capital funding, goes to women in this country. Now, if you're talking about bringing a woman of color, there isn't even data to show how much money goes there, because it's pretty much negligible. So if you're planning on trying to start up a company off of equity funding from like a venture capital fund, I would really recommend that you start to think about other ways that you can go about raising financing. Now, for many of us and for many companies that start off within our country, whether it's an LLC or corporation, a lot of people who have intergenerational wealth look to their friends and family in order to get that sort of startup capital and to move forward within their companies. For many of us who have been in essentially artificially created poverty situations, that access to that friends and family round isn't always going to be there for you. And so we as women and women of color actually have to work even harder to try to get the startup capital going in order to move our businesses forward, because that access to capital just isn't flowing right now in our country, unfortunately. So again, if you are looking to raise capital in order to move your business forward, you really want to consider how you're going to do that and what is going to be the best entity in order to accomplish those goals. Now, if you've already got your startup capital, or you already have some funding coming in that can help push you along, then that's great. And ensure that you're constantly thinking about the cash flow, because it is the cash flow that will quickly kill a business if you cannot sustain itself. And when I mean cash flow, I mean income. Where are your sales coming from? Essentially, if you're a service business, where are your next clients coming from? And that's going to B, actually a lot of your time as an owner is thinking about that cash flow and where you keep getting the next cash coming into your business to keep the lights on, to keep the website up, and to essentially, if you are going to have employees, keep those employees paid. Are there any questions about that?
That
I
is such
mean,
a point.
thank
I'm
you
sorry.
so much. I'm so happy to be here and learning from you. Thank you.
Okay.
That is such a good point. Cash flow is king, you know, and if we don't have cash flow coming in, we have to pivot, you know. These are when the pivot strategies come in, you know. Do I need to pivot and, you know, bring in another service someone's going to actually have to pay, you know, if this product's not working, you know, how do I adjust it so that people will buy, you know, the product that I'm selling. So we definitely need to think about this because at the end of the day, it's all about, like Tadha said, bringing in income. You know, do you have a viable business where people are going to buy your product or service?
Exactly, Cerila. Absolutely. And as a side note, ladies, when I started my company, I've pivoted through Jackrabbit development 4 or 5 times. And I have recently decided to be a who, not a what. So it's not what does Jackrabbit do, but who are we? And then essentially pivot within that. So when I first started my company, I thought I was going to be building homes out of rammed earth tires, earthships, essentially. And that idea 5 years ago is no longer what I do at all. And we started off also as a general contracting company. Now we're actually an architecture design company. And so it was those steps and the ability to constantly pivot and be flexible with the situation that has allowed me to continue to grow my business. Because if I had held really steadfast and surprisingly, I'm a Capricorn and super stubborn, but yet had I not been willing to bend and move with what I was seeing, my company would have been out of business in the first year. Also, had I not had a strong operating agreement in place, my business would have been taken over no less than 4 times by other not so great members within my company. And so again, ladies, if you're bringing a business plan together and you're bringing in other partners, it's not only good to protect yourself as an individual, but also to protect the entity itself. Because when money starts to flow, in fact, I'll tell you a side note story. My first business partner, the first day we got $100,000 check to do a contract was the day he tried to take over my company. Literally the day he tried to do it. And luckily, I, being a lawyer and having written our operating agreement to be very strong to protect the entity, was able to immediately go to the clause that said, oh, that sounds like you're disinterested in our business anymore with the actions that you're deciding to take, saying you'll no longer do work unless I meet your demands, and was able to push out that member through the operating agreement, ensuring that I protected the entity itself when they were trying to take it over. And again, when people come together to start businesses, everybody's happy. In fact, that's also why I really love to be at the startup point of a business, because everybody is like doe-eyed and dreamy, and you have these great aspirations, and you have to be optimistic to want to get into something like starting your own business, because being a business owner is not for the faint of heart. It is literally the hardest thing I have ever done. I've had 2 children and passed 2 different bars, and I'm still telling you, owning a business is by far the hardest thing I've ever done in my life. And I've spent many a night crying out to God, asking not to forsake me in this process. And so you really have to be optimistic. But that said, do things like have operating agreements in place when things are good. It's just like having a prenup in a marriage. A marriage is really a financial decision to get into in some sense. I'd love to say it's all about love, but this is a business decision. And you want to have rules in place when things aren't necessarily going smoothly, so that you all know how to operate when things aren't going smoothly, because it is the absolute worst time when things aren't going smoothly to suddenly try to say, oh, let's try to put some rules in place. not the time at all to do that. So again, really encourage everyone, always have that operating agreement in place, particularly if you have other business partners that you are getting involved with, because inevitably something will happen. And you want to just have a rule that you can rely on to go to. And that's all spelled out in that operating agreement. Okay, next slide.
Tadha, I have a question for you because you brought this up before. You had stated that if you're co-mingling your funds, so like, let's just say you have a bank account and you got your income coming in there from the business and your personal coming in from the business, does that affect your liability if someone sues you?
It definitely can. It's also going to affect at the IRS level. If you get audited, that can start to affect things. And so you certainly don't ever really, and I will say for a second, for 2 months, my law firm didn't have its own bank account set up. And I was really, really uneasy about that because of exactly what we were just describing. It creates a liability issue. It creates an audit issue. Once you start a legal formation of a company, whether again it's an LLC or a corporation, you really want to treat that entity like its own individual. It needs to have its own bank account. It pretty much should have its own emails. It should probably and operate like a business. So if you use your phone, your personal phone, to constantly answer your business work calls, then get your business to start paying for the phone. One, that's going to help you on taxes because it's going to reduce your income, so your taxable income. So operate like a business. And then two, it's going to essentially show that you are operating your business as a business. So do you have something like a phone line, bank account, those types of things that really show you're working as an entity. So please don't commingle your funds together. Set up a separate bank account just for that company. And then if you want to pay yourself, you will set that out when what your guaranteed payment would be in your operating agreement, and you pay yourself directly from that bank account. But don't try to commingle the funds together. Now, obviously, when you're starting up, you may not immediately have a bank account. So the first month or two, you might be paying those expenses out of your own personal bank account. Again, you need to save all your receipts. And you need to make sure you're documenting that, because what happens is companies, whether it's an LLC or a corporation, we don't have standard deductions. So there isn't that standard $10,000 deduction. You literally have to document every single deduction. And that again helps to reduce your taxable income. So if you are doing that initially and you have to pay out of your own bank account initially, make sure you save all those receipts and make sure you get them accounted for or potentially reimbursed by your LLC, but make sure it's accounted for in your income when you go to file that year.
Okay. We have another question for you, Tadha. I mean, you just hitting everything today.
Thank you.
Norma, do you have your question?
Maybe she's on mute.
Okay. Norma, are you got to probably unmute yourself. Okay, she said, how can I protect me legally as an individual and as an entity if one of the members dies?
Oh my gosh, I love that question, Norma. That is totally something I keep saying. We really need to be talking about this with business owners. A lot of this came, I don't know why we're getting a feedback, but a lot of this actually came up during COVID. We had a couple of companies that were operating and the sole member within the LLC died, and they had a whole bunch of contracts in place. And so there are different ways that you can deal with this situation. If you're a multi-member LLC, then you can spell out within that operating agreement what happens to the member's interest if somebody dies or becomes incapacitated. Sometimes that gets absorbed by the other members, or in some cases, for instance, in my LLC, it's very clearly spelled out that that membership interest can actually transfer to my heirs. My children can take over my membership interest within my own company. I'm 68% owner and I've invested a lot into it. So I don't want that membership interest to just transfer over to my other partners. I want my family members to have the ability to come in and try to run that company if they want to. They don't have to, but that's really needs to be spelled out what you're speaking of in the operating agreement, or again, in those articles of incorporation, what's going to happen to the transfer of that ownership. There are also times, for instance, when people will get married and you really want to make it clear within the operating agreement or the articles of incorporation that potentially those assets or that ownership can't necessarily be attacked by the other spouse. I really just recently saw a lawsuit about this where a fairly well-to-do company, the CEO or the managing partner essentially got divorced, and they went to court in Colorado to decide whether or not the spouse had any sort of financial interest in the membership ownership of that company. And because they had a really good attorney who helped them draft those operating agreements, the state of Colorado said, nope, it's very clear that this membership ownership will not transfer and cannot be diluted through these types of actions. And so one, helped to protect that person from this deranged spouse trying to take over their income and their company. But two, where to your point, if somebody dies, then it helps to spell that out. What happens? If it's a single member LLC, then the likelihood is your LLC is just going to go away unless you have it spelled out that, for instance, the membership ownership can transfer over to a trust. But then you would want to think about, well, who's going to be administrating my trust and who's going to run my company? And so those types of things are things you should be thinking about what would you want to have happen to this company if you become incapacitated or you die, because eventually we're all going to die. That's not, no one here is a zombie or immortal. We're not vampires. And so those are things you want to do to protect your family with other members, or to ensure that you have some sort of continuation within your company in order to see it succeed and create a legacy.
Okay. I have another question for you, Tadha.
Okay.
Ariana, I heard it would only be worth forming an LLC if I make over 50K a year through my business. Is that so?
No, absolutely not. Whoever told you that does not know what they're talking about. I'm sorry. If you are operating as a business, you should be forming an LLC or a corporation or something. The filing fees are really not that expensive at the state level. And again, it's going to help ensure that you are protected as an individual, not necessarily just out there operating as a sole proprietor. If you waited until you made that type of income, then everything below it is going to be essentially able to be attacked if something were to happen. And you are essentially operating as a sole proprietor, which again, I just would not recommend that anybody do. So if at bare minimum, you're looking for the easiest thing to get off the ground and the cheapest thing to get off the ground, it's an LLC. The filing fees are cheaper, and the taxation process is a little bit cheaper when it comes to all of the different paperwork that has to be filed in order to have your taxes filed every year. Any other questions? Next slide. And just again, FYI, we're down to like 15 minutes. So I think we already discussed this, but we did not discuss the member managed versus the manager managed. So on every single state website, we're going to be asked this question. Are you a member managed LLC or are you a manager managed LLC? And what that really means is, are you as members operating the day-to-day activity of the business, or are you hiring a manager to operate the day-to-day activities of your business? Probably for many of you, you're going to be a member managed LLC, not necessarily a manager managed LLC, but that is the difference. A manager is someone who gets hired in by the members to do that day-to-day activity, just like a CEO of a corporation classified as an officer would do. But as the member managed LLC, you or your members themselves are the ones who are doing the day-to-day activities within the organization. So that means you're the ones who are ensuring that your accounting is correct. You're the ones who are ensuring your paperwork is filed at the state corporation or Secretary of State. You're the one who's making sure, well, let's be real. As an owner, you're pretty much the one starting off who does everything anyways. You're the marketer. You're the person providing the service. You're doing all of that stuff. So if you as the members are doing that, then you're that member managed LLC. Okay. And the pass-through taxation, just in case that wasn't clear to begin with, the pass-through taxation just means that essentially you're not taxed at the entity level for any of the income. When your taxes get filed, your accountant will issue you something called a Schedule K, and that Schedule K will then be included on your own personal taxes. And that's where the entity starts to get that taxation, is at your own personal individual level. So that's what we mean when we say pass-through taxation, is that it's not getting double taxed like a corporation will at its single entity level, and then those dividends being taxed as capital gains at your personal level. All of it just passes through to your own personal filing of your own taxes. Awesome. Next slide. Thank you. I'm not gonna make us watch that, so we're running close on time, but I'm just gonna nutshell it, which is, hey, a professional LLC, a PLLC is something that you are only going to file if you are required by your licensing agency. When I mean licensing agency, are you required in Arizona? The only licensing agency that requires this is actually the Realtors Association. So lawyers no longer have to file professional LLCs, dentists, hairstylists, plumbers, people who get licensures from a state-run entity. They will be the ones who will say whether or not you as an individual have to file a professional LLC. And that will really matter, as this video would have said, in Arizona, whether or not you want to get paid directly or whether or not you want your entity to get paid. But otherwise, I don't know that much about Nevada or Utah or California. I saw someone's on there from California. I don't know at that level, but if you, as yourself, you will know if you are operating under a professional license, whether or not your licensing agency will require you to do that PLLC.
All right. All right, I have a question. I want to ask you if an LLC can be protected against personal defamation. I ask because I have already been through a situation like this, and it is very unpleasant, and I did not know what to do at the time.
Yeah, that essentially, I think, is a good question about, goodwill around a company. And theoretically, you probably could try to protect a company in that sense, but it really goes back to like reputation and the goodwill of a company and what's going on, and whether or not you actually have the resources to go after somebody for defamation of a business, because those things can be costly lawsuits. And so if you don't really have the resources to go after somebody for that type, and defamation is something hard to establish. You actually have to establish damages around stuff like that. And so, for instance, if you didn't see a drastic drop in your income or things like that, it would be very hard to prove in a legal situation that you suffered damages and defamation from someone's comments. That is to say, if things like that occur, typically corporations or companies will hire PR people So that's where you see PR become really important to try to counter things that are said negatively about a business. But also, just to be realistic, this is going to happen to you a lot. I've had a lot of people go out and say negative things about my company because they were necessarily called my competitors. And so, they'll go out and try and derail a contract, or they'll go out and try to derail a client. And that's just almost sort of the cost of doing business, is you're going to come across haters, and you're going to come across people who try to put you down. And the best way to do it is to just keep shining and delivering and being accountable for what's happening. And then to target it with, or to counter that with some really good PR. Great question. Also, I'm going to get mindful of time. So if you could switch over to the one. Oh, and also that Keat Law, great law firm, but they have a lot of information on their website if you're looking for a little bit more in-depth stuff. If I went over this too quickly, that Keat Law organization actually has a lot of accessible videos on their website. So S Corps. You'll hear this term thrown around a lot, and I just want to make it clear that an S Corp is not actually an entity that you're going to file at the state level. There is no way to create an S Corp. There are C Corps and there are LLCs, but S Corps are essentially a designation that you will apply to from the IRS. And what that's really saying is, for instance, you're an LLC being designated to be taxed as an S Corp. What that S Corp designation then allows you to do, for instance, is to treat yourself like an employee. So then you, as a member of an LLC, could be paying yourself on a W-2. So if, for instance, you're trying to purchase a home and you want to try to show that income stream, W-2s can be really good to help establish that that cash flow that lenders will look for in order to approve you for a mortgage. But also things like state benefits, so unemployment tax, paying into Social Security and FICA and Medicare. Those things will start to be important, particularly as you get more and more into your business. And so S Corps allow LLCs to get taxed like corporations. So again, you're going to get taxed twice at the entity level and then again at the personal level. But like I said, it will allow you to cash in on different benefits. And so, for instance, one of my business partners in our LLC, he also operates an LLC, but he is designated as an S Corp. So what that allows him to do is to access state benefits that he would no longer or not be able to access were he just an LLC, not being taxed as an S Corp, because then he would be getting guaranteed payments and he wouldn't be paying into the Social Security unemployment stuff. That also allows you as an owner to essentially have your company pay for those benefits. You as an owner in an LLC, if you have that pass-through taxation, are going to get taxed at a different rate because you are not necessarily paying unemployment tax, paying Social Security, paying FICA, all these things that an employer normally pays half of for you. You as an individual are going to start getting the full brunt of those costs. And there's some chatting going on. Am I missing something?
No, they're just asking if we can send out the presentation. I said, yes, we'll send it out to everybody.
Oh, okay, great. I didn't want to miss anything if anyone was losing that. Okay, so if there aren't any questions on S Corps, I think we are almost at the end of the presentation. So we'll just have a few minutes for questions. Okay, nonprofits. So a lot of you may not have thought about a nonprofit, but I just really want to help you understand that some people may actually be running businesses that may be better suited as nonprofits. For instance, maybe you're providing a charitable service to the community that you serve, healthcare, education, trying to build affordable housing. These are all things that could actually be done under a nonprofit in the nonprofit status. But you are still essentially running a company. So don't let the idea and the name of a nonprofit fool you. You are still having to look for cash flow. You're still having to constantly be looking to either sell a service or provide some sort of service that somebody's going to pay you for. And this is typically where you would see people going after things like grants or philanthropic funding, is under this nonprofit status. And so even though you might not have considered it before, if you're thinking about only running a business on grants and philanthropy, then you might be looking more at a nonprofit than you are necessarily at an LLC or a corporation that's going to expect you to be constantly bringing in cash flows and streams of income rather than looking to other people to try to fund your business, because that's not really a business, that's a nonprofit. Great. Yeah. So once you all file either of these entities, any of these entities, hopefully none of these entities, or not none of these entities, you're going to choose one that's not a sole proprietor. The next step's going to be is that you're going to file an EIN. So these EINs are issued from the IRS. It is like a social security number for your company. And this is what helps to identify those taxes to the IRS, because they're always going to make sure that you're paying taxes somewhere in your life. And so this EIN is essentially something you will get from the federal government. I've heard business owners who will tell me that they have businesses and say, oh, I have an EIN. And I'm like, that doesn't mean you have a business. That just means you have an EIN. And you don't need to prove that you filed any of the state paperwork to the IRS to get an EIN. You will need that EIN though in order to go get a bank account and do other things. So just don't think that because you've only got an EIN that you have actually filed a company. That's just not true. You have to go through these other steps, such as filing a legal formation at the state level to have actually created a legal company. And yeah, that's pretty much it. Oh, okay. So city, county, tribal registration. I was going to say, I thought that was the last one. These are all things that are going to occur later on. So for instance, if you're in Arizona in the city of Tempe and running a massage parlor, not like the happy ending massage parlor, but like legitimate massage therapist, you actually have to register for a license. If you are operating and selling retail goods, you're going to want to register for a taxation, a privilege tax, a TPT. So there are different things that are going to occur at everybody's level. If you're operating a business within a reservation, you're going to want to go and register. If you're operating a business in Arizona and you start doing business in the state of Nevada, you have to go and register in the state of Nevada. You have to act as a foreign entity, whether it's a foreign corporation or a foreign LLC operating within that jurisdiction. So if you plan on, again, growing your business and becoming, for instance, a national company, you want to be mindful that just because you registered in Arizona doesn't mean you now have the right to go do business in Nevada. You still have to go register in these separate states in order to have the protection of doing business within those states. So I think that we are last one. That was it. And I'm getting up to the last 2 minutes. So if we have one final question, or I could just wrap up and say, I know that I threw a lot of information at you ladies. Like, I get this. I literally took an entire semester of class in order to gain this information. And a lot of this information has come from years of being in business. So don't think that this is the only time you can ask questions. If something comes up later and you're reflecting on this, I really highly encourage you to write down your question and then ask it next week. And I'm really sorry that I have to go right at 7:30. I got invited to come be at another event right after this one. And so what I will do is take all the time next week that you ladies need to answer any questions that I can without giving you legal advice. So what I might do is take your question and throw it more into a hypothetical. So I'm not giving you legal advice, but it instead educating you on different situations that can occur. So I really appreciate you all taking the time to be here today. And I'm really excited for all of you who are thinking about starting businesses. And I am always here as a resource as well. I was speaking at another event just the other day and was saying, you know, operating a business, you really need to have a network of people, whether or not it's women or men, a network of business owners that are there to support you and that will be there to encourage you, because there are a lot of ups and downs in running a business. And so if you have a strong support network, you're much more likely to succeed in running the business than if you're out there doing it by yourself and you don't have someone to turn to for advice, or even just for that, like, had a girl attitude when you're not having the strongest of times.
All right. Well, I know, Tadha, you have to go, but thank you, ladies, for joining. Now, don't forget, next week, Tadha's going to take us through how to register your business in Arizona, Nevada, and Utah. So I would highly suggest that you come to that, that meeting. And as she's going through, you going through yourself with your how to register that business as well. This will be recorded as well, so you could go back on the website and look at this again. Also, the other 3 webinars next week will be recorded as well. So, again, thank you, Tadha, and thank you all for attending. Reach out to me if you have any questions. I will send out the PowerPoint presentation to everyone. But everyone have a great night, and we'll be back at it next week. All right. Thanks, everyone.
Thank you.